Right. So let's talk about support and resistance. So, what is support and resistance? They are areas in the market where price are likely to react off of them and, reject sometimes. Why? Because these areas are po points of interest of other buyers in the market. So, what drives the markets, right? People buying and selling. And areas of support is where lots of people are buying. So that's why when price comes to an area of support, you see a reaction where it goes bullish. And areas of resistance is where people are selling or taking profit, which is selling essentially. And that's where you get a reaction of, bearish reaction. So they're just areas where people are buying and selling at. So where do you find these areas? So let's go to the charts. And we are back to where we were in the previous video. And if you haven't seen it, check it out because I talk about this. So now we're back on this little drawings I drew. So, as you can see, in periods of uptrend, we create higher highs and higher lows. Now, when price pulls back, it pulls back to a certain area and then it pushes off again. And it's not coincidentally that I drew it like this. As you can see, price came up, came down. So as price comes down to this low, it reacted, well, it created a high first of all, came down. So we now know this is an area where sellers are, well, selling, or all people who are, in a trade in the rally are taking profit. So that's why price comes down a bit. But it's an uptrend, so price, we know price breaks the highs. Price breaks the highs, and then it comes down again to a point where this was a previous point in the market where people were selling, and now it's turned to support. So price is using it as support, and prices reverse back up. It comes down, uses support from the previous high, and goes up. Now in pairs of consolidation, you got these. So price comes up, strong resistance, reacts, sells off, all the way down to support, reacts, buys up, to resistance, comes down, sells off, and reacts to support, because lots of people are buying here and lots of people are selling here. And let's say, for example, lots of people are selling here, then price is here. We know that lots of people are selling at this area because in the past, prices sold off in here. So we can expect that people are still selling at area over here. So when price comes up, we have a sell-off. And sometimes, every now and then, prices break these support and resistance. They don't always hold true. And sometimes price might go below it and then come back up again. And sometimes price might break below it, come back, retest it, and instead of people buying here, now it's turned into an area of resistance. So people are selling. So now price then retests and rejects. So it's been in a range for a while, then breaks out, retests, and then rejects it because people are selling here instead of buying. And yeah, it can be true for other structures like, you get a high, then it goes up high, and then, well, people sold here in the past, so then price then shoots down. And guess what? We have a break of structure right here. So now, what we used to have was, well, bad drawings. But if I can draw it better, what we used to have was bullish structure turned bearish. So, and we can see it at areas like this. And what happens is sometimes price comes back and then sells off at areas of support and resistance. As you can see, it used to be support, now turned, what used to be support, now turned resistance. As you can see, price came up, down, up, over, and rejected. Same area this rejected, and same area where this rejected again. So now, enough of the theory, let's go to the actual market and try to find it. So, first of all, let's go look at this example. So we got, higher high, higher lows, and the previous high became support. So if we come here, so we got a high, low, high, low, high, low. Let's take this for example. Boom. Price came up here, and you can see when price came to this area, it rejected quite a bit. Pushed up higher, came down, just about tapped into this area, pushed up higher, right? That's one there. And it was also rejected by this high as well. We've also got, well, if we can find any, let's find some more examples. Right here. This is an area of low. As you can see, this was a low, rejected, came up, and when price came back here, rejected again, came back for a second time, rejected, and then continued pushing higher. And as you can see, got rejected here once again, and then got rejected by this zone before ultimately breaking and then retesting it, and then getting retested a couple more times. So that's that. And let's look at an example for a downtrend. So now we've got downtrend, as you can see, downtrend, because it's going down, creating lows, and lower highs. So if we go to this area right here, you can see where price rejected, came down, pushed up, came down, and then retested it and pushed even lower. Look at that. And if you've seen my video on candlesticks, you'd also see that we got a bearish and bullish engulfing, pushed up higher. So that's how you identify support and resistance. You look at previous times in the past where prices rejected areas, and then you can forecast that there's a probability that price will reject this area again once price gets to it. So, as you can see, another point of rejection right here. Price then breaks, goes down, and then, breaks above, turning bullish. So now in a bullish structure, so price comes down, retests this area, and then pushes higher. So yeah, and again, doesn't always work. As you can see, blasts right through. That's the beauty of trading. Not everything is going to work 100% of the times. So that's how you identify support and resistance, right? In an uptrend, you want to buy, so you got to look at areas of support where you can see price will react and buy off of. So as you can see, it's creating higher highs, so I'm looking at buys, and then price comes down to this area of support, and I see this candle, I buy, I put my stop loss below the low, and then I can target the next high, because we can expect price to break highs in uptrending markets. So that's why we target the highs, or maybe even beyond the highs, because we expect it to break the highs, remember? So you can at least target the highs. And then bam, that's a trade right there. So anyway, that's just a quick example. Hope you enjoyed. Make sure you subscribe, like, and yeah, if you find this useful, I'll see you some point again then, guys. Peace.